in a very strong position now, and their leadership is just rapidly going. Everybody that seems to want to be a leader, they end up dead. For 47 years, we were pushed around, and we shouldn't have been. And I think I can say, and you see it as well as I do, you see the tremendous progress that's being made. Their missiles are being wiped out rapidly. Their launchers are being wiped out.
Is the narrative on Wall Street risk off, sell stocks, buy oil, hide in gold? It wasn't yesterday. That is back today. Are investors having a change of heart, or are they just stuck in the mud? Welcome to the Big Money Show. I'm Dagan McDowell, along with my co-hosts, Taylor Riggs, Brian Bremberg, Jackie DeAngelis, and with us for this hour, making sense of it all and making money as well. He's the host of that show, Charles Payne. Great to see you,
Thank
Charles. Checking markets today in the red across the board. The script says keeping composure despite a week of uncertainty. I don't know. That's pretty rocky. It's been a rocky week. Let's just leave it at that. The first signal that traders think the worst case scenario might be coming. Sentiment is changing. It's been changing by the day. Something important is happening. Buyers have been stepping in, Charles Payne, and both retail and institutional investors have been seeing some opportunity in all this chaos. It's exactly what Charles Payne preaches. Look past the fear. Let history be your guide. The message from this week's market action. Wall Street isn't ignoring the Iran conflict, but it may already be looking past it. What do you make of the day? I'll call it a day-to-day. Is it a psychological shift? Because yesterday it certainly seemed to be that investors, and I don't want to say Wall Street, let's just say investors thought this would be a short-lived, contained operation. Iran would fall militarily and even as a regime very, very quickly. But today, not so much.
You know, and I'm glad you used the word investor. I like to separate the word investor from trader because we conflate them sometime. You know, the last line in the intro, which by the way was very nice, I appreciate it. You always look to the future as an investor. You always look past what's happening right now to the future. Now, it may get worse in the future, and you may have to put that into your calculations, but you're always saying, okay, I see what's happening now, what's going to happen next week, what's going to happen next year. And as an investor, if you look at things like the fundamentals out there, for instance, Broadcom, that report last night, absolutely phenomenal. Just absolutely phenomenal.
Don't run my stock picks.
All right. You look at some of the other things. The economic data this week, it's so sad that it's been drowned out. The services number, mind-boggling.
We talked about it yesterday.
Manufacturing, mind-boggling. What we're seeing right now, it points to an amazing year for the economy in 2026. Of course, we now we'll have to start factoring how much higher oil might eat into that. But the pieces are in place, and stocks have come down. No one's talking AI bubble anymore. I mean, at one point, I think maybe even today, all the Mag 7 stocks were below the down for the year, right? So yeah, I'm licking my chops. I am licking my chops. Although over the last 4 or 5 weeks, I took my cash position to an abnormally high level, but I'm licking my chops to put it to work.
Let's talk about some of that data that came out. This is from Torsten Slok. He puts out a daily Spark note. The Chicago Business Barometer for February showed strong improvements across production, employment, new orders, and deliveries. Traditionally, it's had a pretty decent correlation with the non-farm payrolls. It just shot a straight line up in 2026
I'm using that chart in the
so
show.
far. You are?
Yeah, I mean, it's phenomenal.
I'm still in your charts because you're still in my stock picks.
My goodness.
Yeah.
So again, what am I trying to say? The forward-looking data looks really positive. We talked about ISM as well. I think another interesting thing in this market, you guys, and we talk about investors versus traders, the smart money versus the retail money. There's an interesting note from Citadel saying that one of the things that increasingly is keeping this market up has been the participation of the retail investor. They say that they've been one of the most dominant forces in the market so far this year, and that retail's appetite to buy the dip has been 2.5 times larger in terms of notional value.
But now you're bearing the lead, though. The guy who said that went from being bearish to bullish. their chief strategist, right, Scott Rutter. So he's saying this is the smart money saying, you know what, retail's got it right. And yesterday he went from being bearish to bullish.
So just so you know, when you said smart money,
I like to use air quotes.
As if quotes for that.
I know, but as if the smart money isn't the retail money, Charles shot you laser eyes.
Well, did you see my
As
quote?
did I. Yeah, I did.
I used it in quotes.
No, maybe it wasn't at you, but because we both.
The bottom line, though, is, yeah, listen, they've been buying a dip for a long time. It's worked for a long time. And again, you know, listen, the war is a big question mark. It's a big, dark question mark. And obviously, that's what all the red on the screen is about.
So can I jump off that?
Yeah.
This reporting that's come from Jennifer Griffin and others about Iran's missile inventory, let's call it. They're saying that they're drawing down on their missile stockpile and that there's generally essentially a finite number of missiles that they have. So they're shooting less missiles because they want to prolong the duration. That's what I think is impacting the market today as we sort of digest what the market was thinking versus today. I think that is kind of the pivoting point. But it also says to me that there's a flip side to that. Yeah, they're trying to extend the duration, but they're losing firepower. And it's this engine sputtering that I see happening. Remember, this started on, well, for me, it started Saturday morning when I woke up and saw the headlines, but it happened in the middle of the night. And we're only on Thursday now. So I think there has to be a certain amount of patience that goes along with the sophistication and the importance of this kind of operation. And I think the markets are being pretty reasonable in general with that. But that's not to say that from day to day, as there's a new headline, they don't sort of reassess and realign. The duration issue, I also think, is what is causing the spike in oil prices today, because the longer Iran has control of the strait, the harder they're going to make it to have natural gas and oil come out of that area, which is, you know, significant. I never said that it was insignificant, and gas prices, retail gas prices here in the United States are up on this. But the president had given us a timeline, 4 to 5 weeks. Earlier this week, he had also told us that he thinks the operations are moving a little bit ahead of schedule. So I think there's a light at the end of the tunnel, and investors, you know, I mean, I look back to Liberation Day, and to me, Charles Taylor, correct me if I'm wrong, I don't feel the same kind of volatility that we saw at that point, the same kind of panic in this market. It's just this, you get a new headline, you readjust a little bit, then some investors come in and say, wow, the market sold off today, it's a good time to buy. You know, and so I think duration is going to be the key.
Yeah.
Well, I think it's easier to quantify what is happening. Even I do not expect the leadership in the Trump administration and even the president himself to lay it all out there and say, this is exactly what we're doing right now. This is exactly how much we have in munitions left. Here's our Patriot arsenal. Here's our Tomahawk arsenal. Here's exactly when we're going to wrap it all up. I don't expect any of that. And the Democrats are like, we didn't hear this, we didn't hear this, we didn't hear this. Yeah, of course you didn't. Because you're not the enemy, but the enemy is listening.
But it's like the old saying back in the war, loose lips sink ships.
Right.
Remember back in the day, what was it, World War I or II? One of them.
But to Jackie's point, this is in terms of quantitative analysis of what is happening economically and financially for, say, the S&P 500, where those 500 stocks get 40% of their revenue roughly from overseas. And when you have overseas economies that aren't locked up, but that are certainly going to be hurt because of the a lack of fuel and energy coming out of the Gulf, you can start doing hardcore analysis instantaneously. The trade announcement, the tariff announcement last spring, it was more kind of shooting from the hip. Shooting, I use.
Right. Well, I mean, and to your point, listen, everyone was talking Smoot-Hawley. What made that tough was retaliation. You didn't know who was going to retaliate, who wouldn't, where it would go. There were so many more unknowns here. You can sit down and say, okay, for Qatar, right? They say it's going to take us X amount of days to rebuild our LNG facility. We know that, right? Also, from what I understand, it takes about 7 to 10 days for us to get the insurance in position and the Navy in position. And we'll take this Strait of Hormuz. And it's just being patient enough to deal with that. But we know it's not going to take forever, or, you know, it won't be some of these. The tariff thing still isn't necessarily resolved, right? So this will be resolved a lot sooner.
I also think there's another thing maybe contributing war aspect to the sell-off today, which is, you know, we knew that Iran was going after the neighbor nations. You bring up Qatar. I believe that's the first time that LNG facility has been closed in 30 years, which is significant. But also there was an incident in Turkey, and there was some conversation about, does this trigger Article 5, NATO? You know, how expansive is this going to become? Now, to my understanding, that didn't happen. But the market gets nervous, I think, when it sees more and more players getting involved. At the same time, the flip side to that, in my view, is the more people countries Iran hits, the more players that get involved, the harder it's going to be for them to prevail in any way, shape, or form, or as we talk about duration, to even extend that duration. So each argument that scares the markets got like a little bit of a flip side to it also.
Do you think in moments like this, Charles, for an investor, it's smart to say, I want to think about 30 days from now. I don't want to think about this week. The analogy that comes to my mind is like open heart surgery, okay? We're in the middle of open heart surgery. We've got a great surgeon, but you've also got patients where things are going to pop. You know, the blood pressure is going to spike or heart rate's going to spike or whatever. But 30 years from now, with a fundamentally healthy patient and a good surgeon, they're going to be up and walking and things are going to be good. That to me is like, that mindset makes sense to me in this moment. Think that time frame. What do you think about that?
Yeah, absolutely. Or if you just say even a heart transplant, if you get a heart transplant, you have to get up and walk right after it. You don't lay down and rest. They get you up and you start walking right after the heart transplant. And so that's what this is all about, to be quite frank with you. And, you know, we try to, at least I know I try to walk a delicate and balancing act. I don't want to come here and say, oh, man, I'm so excited because so many stocks are cheap, while there are people, service members who are dying. But as an investor, there are some stocks that look extraordinary, like maybe some of these software names, maybe the stock that can change your life if you buy it now and a year from now. ServiceNow rebounds up 50% or 100% in 1 year. And those are the kind of things that are lingering out there right now. So you have to, you know, put on one hat and take off another. You put on your investor hat, and, you know, as this becomes unmoored from fundamentals, particularly long-term fundamentals, you start to smell opportunity.
And the growth engine after that you're talking about, when the patient recovers, not only here, but rebuilding over there and business opportunity there. Yesterday when Larry was here, we were talking about the big, beautiful bill and people starting to see the benefits of that as they're filing tax returns. All of these things are going to start to gel once the patient is up and about and we're through this hard part. And I think that, you know, I've said this, we'll see. I think the markets are going to rip.
Oh, no, we're seeing it in the data already, right? Those first two manufacturing reports for January, February, through the roof. This ISM services number. I don't think I can pound a table on that enough. And I'm really thinking, you know, I was thinking that we were going to have a jobs crisis. If we do, it may not be as bad as I thought it was going to be. And you know what? If all of this pushes the Fed off, fine. I'd rather see the market rally on fundamentals than financial engineering.
Sure, me too.
And we'll talk more about oil as the show rolls on, because there was a tanker that was anchored off the coast of Kuwait that was attacked in the Persian Gulf. And so we're not talking about the kind of choke point of the Strait of Hormuz. We're talking in the Persian Gulf, and that raises, there wasn't a spill, but that raises a whole host of other issues for the even loading of tankers in that region. Good news is that a pipeline run by Saudi Aramco is transporting oil from the Persian Gulf over to the Red Sea now. So from east to west, and that is flowing. So oil is flowing out of the region. But we do care because all of these other nations that need this energy are kind of part of the wheel that helps us as a nation function, or we help them function. Taylor, you're looking at Broadcom and Okta.
Yep, so I want to do a few software names, Charles. I did these for you. First up, Okta is saying that AI agents are fueling an earnings beat. Shares go up 12%. Broadcom says that artificial intelligence revenue more than doubled. Maybe more importantly, because we've talked about software, they said AI is not disrupting its software business. Shares jumped 5.5%.
Yeah, and after 80 quarterly earnings reports, they gave forward guidance for the first time. They were so confident, they said, you know what, we want to put this to bed. And so, again, a lot of the anxiety over AI is starting to just die down just a little bit. And of course, there'll be winners and losers in creative destruction, but I think it's gone so far to the point where everyone's kind of kicking the tires right now.
And I said this when the kind of boots of these software companies started rattling in the first place, is that just because a company can, with AI, develop these software tools doesn't mean that it will, because it's not their core business. Right. And you have to take on an infrastructure to not only develop a tool that an Okta might provide you or a Jira, but then you have to manage it. And that's not your business. That's somebody else's business, regardless of AI. So we want to hear from you. If you have a question for us, go over to our X page or Instagram, leave a comment. We'll answer your questions tomorrow in our Ask Us Anything segment. But first, it's not your daddy's college football. Athletes are raking in the bucks, and now one state wants to make that money tax-free. We'll show you next.